Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have yet another market update video for you. This one for Sunday, October the 25th. So I'm going to jump into some of the stuff that I covered in this morning's video or last night's video. There was a really long video, 40-45 minutes, and there were some really big, scary ideas that I presented. So I want to talk about those a little bit more, and then I just want to dive into some of the crypto charts after that. So before I jump into the content, please do me a huge favor, hit that thumbs up button, make sure you subscribe to the channel, and of course make sure you check the description for a link where you can join the Patreon for just $7 a month. It gives you access to more frequent updates. There's also some links down there to join my trading course if interested, and just a heads up, there's a link down there to join ByBit. They did give me a special promotion for my subscribers. You can get up to $120 in bonus credit when you deposit, I believe it's 0.2 Bitcoin, but the details are down in the description, so if I'm remembering wrong, please forgive me. I want to point out the ByBit promotion, and it actually ends this month, so you only have about 5 more days. So if you're not yet trading on ByBit, it's a great way to get some free capital. And of course, just so there's no confusion, you cannot withdraw that money. So let's say that you deposit 0.2 Bitcoin and they give you $120. You can withdraw the 0.2 Bitcoin, but the $120 bonus is for trading with. So still, it's free money, right? Free money is good. So let's talk about, first things first, let's go ahead and get the pink elephant in the room out of the way. So I posted this chart or did a video about this chart last night or this morning. And basically what I was saying is that if you put the Dow Jones on a yearly chart, it is eerily similar to the last market cycle on Bitcoin. And it's not just similar in the way it looks, the numbers are similar, right? From way down here around, a couple hundred points on the Dow, a couple $100 on Bitcoin. Bitcoin ran up to, 20 grand. The Dow ran up to closer to 30 grand. Pretty similar stuff. But what I wanted to point out, because I don't want anybody to get the wrong idea about this is not automatically super bearish for Bitcoin. And I think that's probably how it came across in the video. There is actually a scenario, if you're a bull on cryptocurrency, there's actually a scenario here that you may like, right? And it looks like this. Think about this. If this is a yearly chart and this is a weekly chart, how long did it take for complacency to play out in crypto? Well, it took 2 to 3 weeks for it to play out. So if this is a super cycle of 100 years in length or 90 years in length, this might come down and come back up, and it might be 2022, 2023 before we realize, oh shit, we're in complacency, right? And then it might come down, and you might be thinking, oh man, there's no way it would take that long, to do that. Yeah, who knows? Who knows? What I can tell you, and I'm going to talk about why that might be positive for Bitcoin in just a second. What I can tell you is if you look at the previous horrific crash, the Great Depression crash that crashed 90%, look, watch this. Here's the all-time high. This was in 1929. It crashed. I believe it was 93%. 89.49% from high to low. It took 1, 2, 3 years to bottom, and then it didn't break its old all-time high until 1954, which was 25 years later. So if this thing, takes several years to play out before we realize we're in a bear market, if we have this complacency kind of like Bitcoin, the scenario that bulls probably don't want to, when they first see this, they're like, oh, this guy's doing his bearish thing again, right? But what they're not realizing is if this is what's happening, there is a possibility for Bitcoin to get its foot in the door. What happens if this takes 2 or 3 years? And what happens in that time frame if Bitcoin does go to a new all-time high, let's say 50 grand? Let's say this thing just muddles sideways for 2 years and Bitcoin goes to 50 grand. Let's say that while Bitcoin is going to 50 grand, all these institutions do come into the space and they do start building all this infrastructure. Things like PayPal stepping in, things like these big companies making cryptocurrency more of a mainstream type of thing. There is the potential that this whole house of cards finally comes crashing down, and that Bitcoin ends up being what everybody who's bullish thinks it is, which is the new standard, right? It may be that Bitcoin says, we don't need you anymore. We're going to do our own thing. You crash away. And maybe that's how Bitcoin becomes, what bulls want it to be. Do I think it's going to happen? I don't think it's going to happen. But do I think it's a absurd scenario? Not really. That's literally the type of scenario where I could see Bitcoin replacing the US dollar, so to speak, right? Again, I think it's unlikely, but it is possible, right? I realized after I shot the video this morning, I thought, man, I hope people don't get the idea that I'm saying this thing is going to go straight down. That's not how markets work. They don't go straight down, right? They never go straight down. That's the problem. If they went straight down, it'd be easy, right? If they went straight down, everybody would know it's time to sell your coins. But what happened in 2018 on crypto, right? Yeah, it went straight down, all right, and then went right back up. So yeah, when it was going down, if it had kept going down, it would have been easy to sell. People would be like, oh shit, I don't want no part of this. But when it started going back up, I mean, it bounced from 10K, right, or 11K all the way back up to 17K. People instead were like, okay, cool. We're going, this is, going to be the new all-time high. We're going to keep going up. And that's where people got trapped. I don't think many people were buying 20K, right? I think a lot of people were buying on this crash, thinking they were buying the dip. I think a lot of those people held, and when it started going back up, they were just complacent, and then it crashed, and they got stuck holding the bag. I think a whole lot of people were buying over here, thinking that, okay, this is, not a bear market. It's going to go back up. This is where people get into trouble. It's not here. It's here and here, right? So keep that in mind, because if this stock market, again, if it's a 90-year cycle, it's unlikely that it's just going to go straight down. Not impossible, but it's more likely that it would go down, go up, trap a whole bunch of bulls, and then go down. Okay? All right, so enough about that. Let's talk about Bitcoin. I have not looked at a chart since before I went to bed, which was been about 8 hours. Let's see what developed. All right, so first chart let's look at a weekly chart, and let's kind of tear this thing down. So how was volume? Volume was better on this week that just closed than it was, the last probably 8 weeks or so. So that's an interesting development. Still fairly low compared to this volume back here, but this volume back here was crazy high, right? Crazy high. This is a pretty good volume. This was over on Coinbase. It says 104K. So this will be, comparable to these levels. Not quite as high as these levels back here, but pretty good volume, right? So that is interesting. The other thing that's interesting is the fact that we don't need the 19-week moving average. We'll take that off. We stopped inside of this rising wedge, and we did put in a little wick. That's bearish in nature, right? But what's bullish in nature is, look here. Last week I talked about this. I said, how many times do you expect this line to hold? It's already been tested 4 times. Trusting a 5th touch, kind of sketchy, right? Well, there it went. It closed above that line. That is a break of resistance. And what is a break of resistance? It's bullish in nature, right? So the RSI does not agree with the price. The price still looks like it's under resistance or inside of this potential rising wedge. RSI says, nope, we're going higher, right? It's very, very seldom that Bitcoin closes RSI up around that level and doesn't push through. You go back in history, it did happen in late 2015, right? Kind of through here. You look again, I mean, here it was a little stutter step, but it kept going up. Look at this. Right here, it was already coming down, so you're in a, that's a little different because you're coming down. It's like a downtrend with a bounce. Right here, again, yeah, it stopped there, but it was a downtrend with a bounce, right? But this is moving up. So you can see in Coinbase's history, the only time it really stopped on the way up was right back here in late 2015. Okay, so that's bullish. It's definitely bullish in nature. Okay, so I'm going to take the weekly RSI off because there's really nothing else to say. That looks bullish, right? Again, you look at the 19-week moving average. We're still sitting above it. That is that line in the sand. I expect that we will come back and retest it at some point. But when that is, tough to say, right? Tough to say. If you look here in like 2017, it just kept coming back down. In previous videos, I showed you the Fibonacci levels. I showed you several different things that you could look for that, 200-day moving average, for example. Well, the 19-week moving average is another one, right? Likes to correct back to that 19-week moving average. Gets too far away from it, corrects back down to it. Gets too far away from it, corrects back down to it. What's interesting about this, and I've never seen anybody talk about this, but it's something worth paying attention to. Yes, it corrected to the 19-week moving average, but it also typically corrects close to the old highs, right? Now, people have talked about old highs. Don't get me wrong. That's a very normal thing. It's very standard. What I'm saying is how most of these corrections to the 19-week moving average, a lot of people use the 21. I use the 19 because that's what a friend showed me. It works better. But when it corrects to that, it's often about the time that 19 is lining up with the old highs, right? So look here, when this corrected down to 3K in September of 2017, man, I wish I knew then what I know now about trading, right? I remember being scared to death when it was crashing, thinking, oh man, my crypto's losing all its value, right? I wasn't buying here. I was holding on for dear life, hoping that it didn't keep going down. But this was such an easy place to buy. That was actually the 61.8 Fibonacci level. That was the 19-week moving average, and it was previous all-time high. Look at that. That is probably the easiest place to buy Bitcoin in the last 3 years, 4 years, right? So crazy. And then, of course, we know after that, things just got silly and squirrely, and they just went straight up, right? So then once it started to move back down, it was more of a bear market type of deal. So instead of coming down for support, it was coming up for resistance. And same type of deal, right? Retesting cliche horizontal resistance levels, right? This would have been more cliche up here, but 19-week moving average was pretty close to this level, and that's when it got retested, right? Comes crashing down. Next time it retests the 19-week moving average, look at that. You seeing it? Comes up and retests it right when that 19-week moving average is close to standard resistance, right? Come up and retested it here. That one, sort of kind of close, right? Not perfect, but I hope you get what I'm saying, right? So if we look over here, let me get rid of all these lines that's put on there because that's confusing. If we look over here and we look at the 19-week moving average, right now it's sitting at this level right here, which would be support, right? So maybe we're going to get that correction back down to 10.9, right? I say correction, right? I'm not talking about crash. Right now, we have to put the crash talk on hold because the chart looks bullish. Am I still a macro bear? Yes, I'm still a macro bear. But let's talk about the more, let's talk about the time frames that are in front of us. Let's put the macro talk off for a little bit because, like I said in past videos, that's very dependent on a stock market crash, right? So, yes, macro bear, but short term. And by the way, when I say the chart looks bullish, that does not mean in any case that I'm suddenly taking out long positions on Bitcoin. I did close a short position today, right, for a small win on that silly pump. I got short on Bitcoin, and I didn't try to ride that back down to 12K or 11K or 10K. I took a very small win. I closed it, I think, at 12,886 or 12,884, something like that. Really close to the bottom of where it pulled back to. So this is kind of interesting, right? This 19-week moving average, if it does get retested, it would line up nicely with this cliche support. If it keeps pushing up, let's say that it pushes up out of this wedge, say it pushes up toward 15, 16K, right? Which is kind of the next level a lot of people are eyeballing, right? Well, your next very cliche support would be down here at 11.9. And if this continues crawling up, that could be, the future might look something like this, where this goes up to 15, 16K, and then comes back down to this level, right? And if you look, that is this long trend line, right? Interesting stuff. And if we draw some Fibonacci levels, and again, this is all like hypothesizing, right? I don't know what's going to happen. I'm just saying, like, if you look at this, look at that, right? So there's your trend line, right? There is, the 19-week moving average will be curling up around that area. And if it went a little higher, like maybe in 16.5, you could end up getting your 38.2 pretty close to that level, right? And then you might get something like this pullback, a little bounce up, okay, we're going to new all-time highs, and then a move down, right? And again, not talking about crashes right now. We're talking about corrective moves. Good Lord, this alarm is getting annoying. But we're talking about corrective moves for right now, okay? Down to like that 61.8. So some interesting stuff developing on that weekly, and I'm really going to keep an eye on that 19-week moving average. I've been talking about it since my friend David Eisner showed me it in early 2019, and that thing has been money, right? Just money. Look at this. I mean, just over and over. Even if you played it here and longed it, you could have got a nice bounce before that dumped down. Right there, retest it, bullish retest, boom, you would have been long, depending on where you longed it at, around 8K. I didn't long back there. Right here is the tweezers. These are the tweezers that I talked about last month or a couple months ago when people were getting bearish, talking about, oh, we're going to go fill in the $9,600 gap. And I said, pump the brakes, bears. I think we're going to bounce up to, I think I said 10.8 first, right? Or 11.1 or whatever it was, the 61.8, wherever that was. And we bounced, and everything was good. Everything was going to plan until right here. And this is where things fell apart for my analysis, because all this I called. I called that top. I called this bounce. I called this short. Everything was good. And then it didn't do what I thought. I thought it was going to do this. And instead of doing that, of course, we all know what it actually did was this stuff, right? So, and I mentioned that 13K was a possibility and that we could be in a rising wedge, but I didn't believe it enough to trade it that way. I didn't believe it enough to take a long position. And I don't regret that, but I'm just saying that's where things kind of fell off the rails. But that 19-week moving average is definitely something I'm going to be keeping an eye on. That's the first level that we've got to take out if you want to start talking about bearish targets. As long as we're above that, I think you've got to play it just like you would have played this back here, right? Treat it as support, okay? And, it's kind of like I was talking to my brother not long ago. My brother doesn't trade, but he is invested in stocks and stuff. He's done well for himself financially. He's a business owner, and we were talking about this, and I was talking about the super cycle stuff and all this crash stuff, and he said, James, he said that's all fine, but at the end of the day, if you sit around and worry about that stuff, you'll never invest in anything, and he's right. I mean, he's right. If you always worry about the doomsday scenario, it will keep you from investing in stuff. So for right now, again, I'm not saying that I'm going to invest in Bitcoin. I'm not. I would rather not buy Bitcoin than pay 13K for it. But I'm just saying, I'm going to chill out a little bit on the macro views until we start putting in bearish structure, because, it's like a broken record. Do I think it's going to happen? Yeah, but, got to trade the charts until it does. So that's kind of the weekly outlook. If I look at the 3-day chart, now the 3-day chart's a little different, okay? 3-day chart has this downward sloping line of resistance, and the last 3-day candle, which is not the candle we're in right now, but the candle before this, the one that's actually closed, watch this. It actually closed right at resistance, okay? And it closed with a wick, closed right at resistance on price and RSI. So I'm a little skeptical. I tend to think this is probably a local top, kind of like this was a local top back here, which I called, right? I think this might get rejected here and then, again, have a corrective move. Then depending on how deep that move goes, we'll know whether it's a correction with more upside to come, or whether it's, this kind of like, okay, we trapped you bulls and now it's, game over. So watching that with a lot of interest. There is obviously, resistance line aside, there's some pretty severe bearish divergence there. And if you guys watched the last video, I showed one of my trade setups. And again, it's not one of the setups that I trade, every single day. It only happens every so often. But it was called the 3 little pigs. And we've got, 2 little pig setup coming in. We haven't got the 3rd pig yet. But we've got this lower high followed by a lower high in RSI. We've got this higher high followed by a higher high in price. So, we do have a running bear divergence on that 3-day chart, and that is definitely not something that you want to see. Historically speaking, when the 3-day put in bearish divergences, for example, from May through June of 2019, it signaled the top. And, you can go back to a lot of these corrective moves in these previous markets, same type of deal. Here's a high, here's bearish divergence, corrective move. Here's a big high, and here's, okay, that's no divergence there. Here's a big high, here's divergence around 1200, and then a corrective move. Here's a big high, here's divergence. That was around 3K, corrective move, right? Here's a high, here's bearish divergence, corrective move, back down to 3K. So the 3-day chart, if you guys wonder why I use it, it's just the best freaking chart there is when it comes to crypto. I mean, just period. It's just amazing how accurate this thing is. So we do have that bearish divergence, and it does have a history of calling tops, right? So I don't want to get into a long position up here for sure. Okay. If we go down one more time frame and we look at a daily chart, well, we've got something really ugly, right? What we have here on the daily chart in the RSI, that is indeed a double top, right? Double tops are easy to spot because they look like M's. And what happens on a double top most often is you come up and test the neckline and then you get more downside. This is a little wonky because it's a fairly small double top, right? It's kind of like this, real small. So I don't know if I trust it, but it does kind of line up with that 3-day chart. You know, the 3-day and the daily both look like they've topped. The weekly looks like it just broke the resistance, so there's a little bit of disagreement there. Okay, but you will often see the trend changes on the smaller time frames first. You're going to see it on a daily or a 3-day before you see it on the weekly, right? So again, not looking for a crash right now, and I haven't been looking for a crash, except that I'm looking for the stock market to crash, right? So we're just talking about corrective moves at this point. And right now, a corrective move, if it got to be a really deep correction and went back down to the golden pocket, would put Bitcoin down around $6,200. Okay. Again, there's lots of levels that it's going to get through. There's that 19-week moving average. There's the 200 moving average on the daily, which is now sitting right at 10K. That is the highest it has been since right through like the summer of 2018, I think. It didn't get the high. Yeah, it didn't get that high in 2019. So we're basically at May 2018 levels as far as this 200 moving average goes. Okay, and it, you know, it's curling up, which is bullish in nature, right? The general rule of thumb is if you're above the 200 moving average and the 200 moving average is moving up, that it signals that you're in a bull market. So, you know, if you look at 2018, yeah, the average was curling up, but it was coming down, right? There's an obvious downtrend. And if you look at 2019, right, started curling up back here, and of course, you know, that was around, depending on how you look at it, it was around 7K or so, and then boom, you get the move up toward, you know, almost 14K. So, you know, I'm not going to sit here and get in front of the train. I'm not going to try to take a positional short or even a swing short right now. I will, you know, keep doing what I'm doing, which is just scalping the smaller moves and kind of see how that plays out. So I don't think I'm going to talk about anything else today. I think been doing a lot of videos. I think I did 3 or 4 this week, so I think I'll wrap up there. But that's what I'm seeing on the daily. That's what I'm seeing in the 3-day, and of course, that's what I'm seeing on the weekly. And that's also, you know, a little bit more in-depth explanation of that crazy super cycle that I talked about in the last video, so that nobody's, you know, in panic mode or anything like that. So with all that being said, please remember that I am just some guy sitting in a spare bedroom. So nothing in the video is financial advice. You should always do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, or precious metals. If you enjoyed the video, please be sure and give it a thumbs up, and make sure you check the description for a link where you can join the Patreon for just $7 a month. Again, you can also join my trading course where I teach you all of my custom setups. And if you haven't already, make sure you check out that link for ByBit. That deposit bonus is up to $120, and it does end this month. So you get about 5 days to use that link before it's no good anymore. All right, this is James with Crypto Common Sense reminding you to please trade safe.